Jim Bauer, Bauer and Dirty. We're talking a little bit off camera about some of the things that we really need to be concerned about. And I ask you a little bit about livestock and the users, because we're low stocks on everything we have in terms of feed and this sort of thing in this country at this point in time. Prices were real high. It looks like they're going to be lower if we grow the crop that we have out there, but we're also talking about potential frost, and the situation in the world is not good. So let's talk about livestock first. Cattle, beef, sheep, hogs, whatever you raise, chickens, either one of you?
Well, I think the cattle industry by itself, obviously, everybody knows that the supply numbers that you just indicated are tight.
Right.
That's so well advertised. That's already inherently built into the price structure. Where we're having some issues of question marks is how high we have to go to ration things out. You know, at what level does a producer need to look to hedge or lay in some hedges? At my firm, what we tend to do, especially on feeder cattle, where you know your exact tonnage right to the pound pretty much, we're looking at opportunities to sell or underwrite the out-of-the-money calls, because if we get exercised on at a relatively high price and they're willing to take the hedge, we'll take the hedge. If not, we'll strip that premium back to the client base. That's a big component of our strategy, but that customer has to understand the risk involved, the margin requirements required. But certainly that's a strategy which we really like implementing them once we know the exact tonnage that they have. The question with the cattle market is going to be demand. Tremendous competition from pork, chicken, turkey, catfish, everything you can think of. Housewife a little hesitant when that price gets up there too high. And don't forget, the price of crude oil is marching higher now. If the situation in the Middle East, the last thing the cattle market needs to see is high-priced gasoline.
Well, there's no question about that. And I know that the milk prices were really good because they were having trouble in New Zealand, but that's kind of getting even up a little bit.
It's behind the market. Yeah, those kind of things get factored into the market and was factored in the price months ago. But from a worldwide perspective, let's step back a little bit. As we came into this year, corn stocks to use worldwide was at a 4-decade low level. U.S. stocks tight. So it's been an odd year in that we come into it with a very, very tight supply and demand picture, and high prices secure high prices. How you curb demand, you grow supply.
Right.
And that's the path we're on right now. But it's not in the bin yet, and that's kind of the whole problem. And if the world needs to rush to buy grain or buy feed, we saw China come in and make some very large soybean purchases this week. Those are value buys. Those are signals to the world that they need inventory. They need end product, and so we shouldn't, get too bearish at these levels on any prices. Yet, if I'm a producer of hogs or poultry or cattle, I want to be very alert that we're probably in the lower half, third, fourth of the market, and that I need to start taking some action sooner than later with a late crop, a rough spring. We need a long fall, and right now the weather maps aren't indicating that. Bear in mind the first full moon in September is on the 19th. So a lot of crop needs to get well beyond that.
We were talking about, always talking about South America primarily as a big competitor, of course, Australia for wheat and all this kind of thing. But some of these other countries aren't really producing as much as they thought they were going to produce, are they?
Well, as Brian said, there's some issues that went on earlier this year in China particularly, and you saw them come after Australia wheat real quick. That situation in the southeast quadrant is still problematic. That's not the major area of production. The major area is more to the north and to the east. But when you got temperatures in the 105 to 109 area and towards that Yangtze River basin for an extended period of time, you know you're doing some crop damage. So again, do what China does, not what they say. I mean, they're great traders. They very rarely make a mistake, and that's been ongoing for 2,000 years. So I watch what they do. I have respect from what they try to position themselves. They're not always right, but I've seen them do a lot of great trades. And when you see them coming in buying supplies and trying to cover their needs, that tells me that they're not quite so sure about their available inventories. Then, of course, you had situations in both Brazil and Argentina where the crop didn't meet the expectations due to early frost. Paraná, lost maybe as much as 33% of their wheat crop, and of course that's the first or second biggest area of production in Brazil. There are a number of factors that have got to be watched from a global standpoint, but if anything that I would say from Ag Day or U.S. Farm Report standpoint that we want to project is that try not to look at just your local, state, regional aspect of the market. Try to look at the global picture, because in the decade ahead, it's going to be global.
We'll be back with more U.S. Farm Report in just a moment.